All right, gang, in studio with us is somebody who I have a great relationship with. Happy to have as our show sponsor, and as far as I'm concerned, the best dressed man in mortgage, Mr. Brian Johnson of Valley Mortgage. Good morning, pal.
Hey, good morning, Eric. Thanks for having me today.
BJ, we usually talk golf before anything else, and even at the top of the hour, I mentioned that I've been out golfing. We golfed once together this summer, and it's July.
Yeah, I know. We need to do that some more, I think.
Yeah. How's your game?
I haven't been out enough to even tell you.
Well, I told you every Thursday morning, 7 a.m., you can join us on the golf course, but you're probably busy working on your suit.
Well, no, not at 7.
Okay.
We usually wait a little bit after that.
Okay. Past 7 is suit time.
Yep.
BJ, we're also talking about relationships today, and I think that relationships are the important thing that we do in real estate.
Yep.
You and I forged a relationship, it was like 10 years ago.
It's been a while.
Yeah.
It's gone fast.
It's like our friendiversary right now.
Right?
It feels really good. So we forged a relationship about 10 years ago, and we worked together, and then we didn't work together, and now you're the mortgage lender that I trust at the highest of levels. Mm-hmm. And the reason why is not just because you're great at your job, but because we've developed a kinship and a relationship. And so as you've been a part of Valley Mortgage, and they've been around since the early 80s, what do those relationships mean to you and your team? Because you obviously are helping people with a really, really important part of their process.
Yep, and we try to take each customer and develop that relationship and make sure that we're really finding out the best programs for their family, get to know them a little bit better, and get to know their whole financial situation so we can advise them correctly on all things they should do, not only for their mortgage, but with other debts, maybe some of their savings goals and long-term goals when they get to retirement. You've got a lot of people looking to buy new homes, then buy second homes, or build or buy investment properties and so forth. So we kind of take a look at everybody's whole portfolio and design the best products for them.
In order for you to design the best products, Brian, it's really, really important that you know everything that's going on in their life. Mm-hmm. You need to know the debt they have, the dreams they have, the wishes, wants, desires, the spending habits. Like, in order for you to fully represent somebody, you're going to know more about them than probably their spouse does. Right?
We get involved with a lot of information with them, and we tell them up front, tell us everything up front, because we want to find the best situation and put you in the best situation financially. So you're going to have to open up a little bit and tell us everything. You've got some people that have some other bank accounts out there that maybe their spouses don't know about. That's always kind of an interesting thing. Unfortunately, you've got people going through divorces, and that happens, but we need to make sure people are taken care of, and people stay in homes and buy new homes. And so we definitely get deeply involved with our customers to find the best situations and mortgage programs for them.
Brian, I was reflecting with a buddy a couple of days ago, and he's about 10 years younger than me. We were on the golf course. Again, it's coming back to golf. It sounds like I golf all the time. I golf like twice a week, and I play 9 holes a time. And
you walk too, I hear, right?
Well, to get gams like mine, you have to walk it on the golf course.
That's good for you.
But we were chatting, and I said, man, I can't imagine what it's like to be single, because I've been with my wife since 2004. And the world has changed, right? Dating has changed. The internet has changed things. And so I had made comment like I wouldn't even know how to date nowadays. And I know that the kids are on the Tinder and all those dating apps and that sort of thing. I say the Tinder like like it's
you
Facebook.
Don't know what you're talking about.
I don't.
I don't.
But everything feels like a facade in that kind of world where you're trying to put your best foot forward. And we think of people who go to church on Sunday. There's always put on your Sunday best and act like everything's okay. And yet when people can come to you in a relationship, they can actually come and say, oh, I got all this crap, right?
Yep.
Instead of trying to act like they have it all together, which our world feels so plastic in so many different ways, they can come to you and talk about the stuff that maybe isn't necessarily peachy keen and pretty. And you're there to help and not to judge.
Yep, we're there to advise. And if you're not ready to buy now, we'll help you make a plan to get there. So it may take some people 2 months to get there. It may take some people 6 months. I've worked with people for over 4 years to get them to where they need to be.
Amazing.
But, we're patient, and we try to help people get into the best situation for them and for their families.
So let's say I come to you, Brian, and I don't have a lot of money. Like maybe I have fairly decent credit, but I don't have a ton of cash to put down on a house. And I think the perspective that people have is that you have to put down 20% on a house, which is not true at all. Like
Right.
you can put down 20%, but there are options and opportunities if I don't have a pool of cash to get in. What are my pathways here?
Yep. So some of those guidelines have loosened up a little bit more now, and there's loan programs out there where you can put as little as 3% down. There used to be stipulations on it where there were income limits on it, so you couldn't make over a certain amount, and you had to be a first-time home buyer. Now those have loosened up a little bit. So for as little as 3% down for a conventional loan, and all of that can be a gift.
And conventional is the safest.
Right.
Right?
Yep.
Okay.
And so if you've got really good credit too, the mortgage insurance premiums, everybody's afraid of PMI, but it's not a bad thing. Those rates have come down a little bit too. So it is becoming a little bit more affordable in that sense. FHA loans require 3.5% for down payment.
Okay.
Veterans can get in for no money down.
Zero cash, right?
Yep. Zero down.
That's huge. A great opportunity for veterans,
It is.
people who have
Yep.
served.
We do a lot of VA loans. We've got 2 VA underwriters on our staff. And then if you're looking out in the rural area, USDA loan is another great program where they allow no money down also.
And in order to qualify for a USDA loan, what are the regulations around that?
There's income limits too, depending on family size and county, and those have gone up a little bit here recently. So they're a little bit higher than what they were last year. I think it's around 90,000 if you're a family of 1 to 4, and
Sure.
if you've got 5 or more, it's over 100 and some thousand. So
Okay.
depends on county though.
So realistically, you can still earn a fairly good living and be able to qualify.
Right. Yep. They're great programs.
I'm shocked. I've been in this business a long time, and I'm still shocked that we are in a society that with as little as $0 down up to 3 or 3.5% down, and you can buy a house. Because if you think about it, Brian, that's a massive amount of risk for the bank.
It is. Yeah.
That's a massive amount, and yes, they're going to charge you interest, and they're going to make their money back on you. But with the mortgage crisis that we had years ago, 2008 to 2011, I would imagine that the pendulum would have swung, and it would have been like everybody's got to put 10 or 15 or 20% down, and it's not.
No, it did swing back to being a little bit more conservative, but it really went from people having to show that they can qualify and you can make that monthly payment, and that's what banks are required to do now. So they've loosened it up a little bit, made the down payment a little bit lower, but yet your debt to income ratio has to fall in line. So you have to be able to show that you can make that monthly payment. So it's not as risky as what it was 10 years ago or 15 years ago, where you were being able to buy a home with no money down and you didn't even have to show that you could actually afford the payment. That's where things got a little crazy and out of hand. So
The good old days.
yeah.
Brian, I think about this. The average sales price in Fargo, in the Fargo-Moorhead Metro, is about $230,000. So if somebody is looking to put down 3% for a conventional loan, you're essentially looking at $6,900 of total cash down in order to buy your house. If you're looking rural or you're a veteran, you can get in with $0 down. So if you didn't think you could qualify for a house, my guess is you might be incorrect. So if these people want to talk about loan options, Brian, how do they connect with you?
Yeah, give us a call at my office, 701-461-8450. Come and see us at 3315 45th Street South, or visit us online anytime at valleymortgageinc.com.
BJ, best looking man in the mortgage industry. Thanks so very much. Folks, we're going to go to break, but in the meantime, head to livefargomoorhead.com. This is Real Estate Radio with Erik Hatch.